module of the Profile Trading Development Pathway, which is designed to help you systematically and step-by-step build towards trading skill and consistency. As a reminder, if you've not already done so, please review the orientation materials and videos that are available on the Resource Hub or sent to you as part of your trial if you're getting started with the trial. In this module, we're going to talk about Module 2, using auction sessions to find better times to be active. And in this session, like all sessions, we start with a challenge. And the challenge is this: when are the best times to look for an opportunity, or are there better times to look for an opportunity? And what kinds of opportunities should I look for during these times? This is a challenge that faces all traders, as there are a number of times that you can be active within the market. Well, here's the key principle that we're going to be leaning on this week, is that there are observable sessions, periods, and micro periods where consistent and predictable auction behavior occurs. In other words, there are better times to look for trades, just as there are better prices. And if you don't have a good understanding of that, of the auction times, a trader believes that all times are good to look for trades and struggles to understand why trades that should work don't. And so at the end of this session, as you work through this module, the hope is that you recognize the varying sessions and micro sessions of the auction, and you're active or inactive accordingly. And we understand, as we approach the markets, that good process begins with good timing. So how aware are you of the impact of timing on your performance? Are there times when you perform better? Are there times when you perform poorly? It's not that you should perform best in all times. There actually are better times that suit different traders and different personalities. Knowing which one is the best for you is going to be crucial at moving you towards trading skill and consistency. So, one of the things to keep coming back to yourself as you work through this module is, do you know which time of day favors your skill, and then which to stay away from? Knowing that there are, to stay away from. Picking better times to be active is related to stacking probabilities in your favor. Meaning, whenever we put on a trade or we look to express an opportunity relative to risk, we're trying to stack as many elements of probability of success in our favor as possible. And one of those elements is time. So you might have a setup that meets all the other criteria of your trade, but time was missing. Therefore, it's not the trade to take. So, one of the questions that we'll keep asking as we go through this are, is this a trade early day, or is this a trade later day? So remember those, especially if you're trading in the daytime frame. Is this a trade early day, or is this a trade later day? Now, we can begin building better process by understanding the sessions within the auction session, specifically micro sessions. So if you carve up, especially as futures traders, if you carve up the entire ETH or electronic session as we look at, we find significant micro sessions to help us arrange information. And those are as follows: from the US close to the Asian Open, from the Asian Open to the European Open, from the European Open to the US Open, from the US Open to through IB formation, or the initial balance formation, from the initial balance formation until we get to lunch, the lunch period, from lunch until the final hour, and then the final hour into the US close. The ones highlighted here, these sessions are ones we're going to be looking to be active, and we'll define the criteria that support being active in those. The ones that are not underlined are ones to not be active. However, there are still positive active things that we can do during those micro sessions to help us be effective in the sessions where we do have some decent edge. So let's start first with the US close to the Asian Open, because really the beginning of you putting on a good trade starts with the end of the prior session. And if I look at, entire day arranged over time, like such as this, it's this yellow box here on the left. There's a quick little post session period that's not really an official new session, and then there's the new session that starts from the Globex reopen. So from 4:05 p.m. Eastern until 8 p.m. Eastern is really the area that I would call the US close until the Asian Open. We have Globex that reopens at 6 p.m. Eastern. Asia opens at 8 p.m. Eastern. This is typically a time when volume is muted. This is, again, not a time to initiate trades. So there's no initiating of trades. However, it's a great time to select decision levels for the coming session. It's a great time to determine a bias for the coming session. It's a great time to review the posture of the auction. It's a great time to ask, are we making any new Globex ranges? Because there is a slight positive correlation once I've made new ranges, new full ETH ranges above the prior day's RTH range, that I will actually close in that direction. We cover that in module 9. But more than anything, I'm generating the initial hypothesis and plan for the coming session. So here's an example of a session that has just closed, and we're going to just kind of take some time to highlight some things that we recognize. I mean, we recognize that there is a prior naked point of control from this session back here. There was a driving multiple distribution. There's some singles here. Looks like there's some unfinished business on a driving day that had a gap. In this session, we had a very nice rotational day. Looks like we're holding below this area. We're completely inside, so that's a form of acceptance higher. We've got a building node of composite volume here, as well as we have a node here at 3515. Given that this is not incomplete, I'm starting to think, okay, so I've got kind of a range here. Overall, my bias, since I didn't get below this low, is still to the upside, but I would need to be above 3515, to see if I could push toward this 3525, maybe up to 3540. And if I broke below this or except below this, and even if I break this, I've got the gap down here and I've got a level down at 3565. So that's kind of the work that you do at this time of the day, and then you codify it. Like that's where I go into my chart and I go, okay, here's kind of my pre-IB bias level. Here are the levels of significant interest that could be in play and within range in the next day. Okay, so that's about all you need to do from the US close to the Asian Open. So then you have the Asian Open through European Open and the European Open to the US Open all overnight. This is the big chunk of the session. Now, some traders actually will look at taking those into separate different sessions where they can say, okay, here's the US session, and then here's the Asian profile, and here's the European profile. I don't specifically break those out. However, you can do that, and if that helps you further arrange the information, I just look at a total overnight session. In fact, I look at a total ETH session, but it's a way to help you see kind of where have things happened. Are there any directional moves taking place in that overnight session to be aware of? For me, I'm looking at the Asian Open from 8 p.m. until 1:55 a.m. Eastern. And now daylight savings time impacts some of this, so you have to kind of watch. But the European Open, which is 3 a.m. Eastern, and Europe goes from 3 a.m. Eastern to 11:30 a.m. Eastern. Like this is DAX, Euro Stocks, FTSE. Again, impacted by daylight savings time. It's a low volume. It's where the price action is very similar to day trading bonds. Because of the low volume, there is very little to lean on, and there's a 97% chance that the subsequent RTH session will trade above the overnight high or the overnight low. So consider how you want to be active. I mean, years ago, I had a trader that came to me. He had lost $500,000 in 1 year, and as we were doing some due diligence on how he was applying his trade, we found that he was being active before the US Open. And so when you have a 97% chance that the subsequent RTH session is going to trade above the overnight high or the overnight low, so like what happens if he's long against the prior session and we take out the overnight low? Well, he's max pain, right? Where if he had just waited, looked to see the US session open, we could have a better probability of success and look to express on that. Now, I may have durational positions with exit orders standing overnight, but I do not initiate new trades. But I'm the things that I'm kind of mulling over, especially if I wake up in the morning and I review what's happened overnight. I'm saying, okay, how does the auction behave on the Asian Open or the European Open? Are there any order flow spikes to take note of? Are there, like if I look at typically on like on a 5-minute chart, do I see any spot where there was like a key move overnight? That's an area to recognize that may have some degree of control. Were there any pre-market economic releases to mark the scene of? Non-farm payrolls or jobless claims, because those were released before the US Open. I typically mark where that price is and see if we trade back through that once the US Open begins. Is my pre-IB bias being challenged? because that's a level. When I set that level, that's kind of, here's generally where I believe the auction will go, and here's the level that will challenge that. Have we traded through that? Because that could be a clue that my initial bias after the close is being challenged, and I need to be more nimble in how I approach it. Do we make new session ranges? So are we, higher or lower, because there's that slight RTH correlation relative to Globex range extension, which we covered in module 9. Are we set to open inside the prior range or outside of the prior range? Is the Globex balanced or imbalanced? Have we made a significant move? Have we just continued to balance inside range? And should we fade that? And is there a chance of or a change to the prior posture of the auction, or potential for that posture to change? And we'll just review all of that and revise the plan. So if we go and look here at how this auction has developed overnight, in this case, the auction is very balanced, and I can see that we've had lots of rotation. We have not made new ranges. We have not traded below my pre-IB bias, so I'm still looking to the upside. The overnight delta is to the buy side. It looks like I'm going to open right here inside of the prior day's value, so I'm expecting some interaction with 35.15. I'm set to open above. At least this is at 7 o'clock or 9 a.m. Eastern. I'm set or open above the VWAP. So very much not really a directional move there, which is good. So it's very balanced as I'm coming into the auction. Okay, so then the US Open until the IB formation period. This is that crucial first hour. So this is from 9:30 a.m. Eastern until 10:30 a.m. Eastern. 80% of the Globex volume is traded. So 80% of the entire volume for the full electronic session, the ETH, is traded during this hour. And questions are we holding the pre-IB bias levels? Are we seeing strong order flow? Where's the open price? Is there any open test drive or open driving behavior? What open type is the auction building? How wide of initial balance are we developing relative to the average? Where are we developing value in relation to prior value? And I'm preparing for potential IB extension trade. So if I look at the chart here, as I've come through the IB extension, just reviewing some things that have taken place. Okay, I did interact with at 35.15 as expected. I've not negated the pre-IB bias. However, there's some interesting things. I'm developing value currently, basically right in line with yesterday's value, but I am seeing some selling order flow. There's the data is to the sell side. Volume is low, and I've got a narrow initial balance relative to its average. So if I've not gotten outside of yesterday's range, I've got a narrow IB, I've got a lot of range that could be in play. This could actually be a good indication of a potential for a breakout. So let's see what this looks like in a half hour later. Okay, half hour later, I have actually extended the initial balance. So I've got my IB extension stats here. I'm maintaining negative order flow. Still, the volume's pretty weak. And I've traded back toward the current day's value, which still is just a little bit below that. But at this point, in terms of probability of success, I have an overnight stat. So here's that overnight stat, the high or low, that is still open. So again, 97% chance I would take out the high or the low. So I'm waiting to see which one. Given the order flow and the relationship to prior day's value, it looks like my bias may be challenged here, but I'm inside the IB and back to value. So I would need to come back outside the IB with strong tempo, but it's early enough in the session. Again, early. So that question, should I trade early? Should I trade late? Or it's early enough in the session that I could still look for a good opportunity to go with and get 1.5 to 2x the IB. All right, so let's see what happens in another 30 minutes. So another 30 minutes, I'm back to initial balance. Still volume is low, but you have to think, okay, probabilistically, it's more likely I'm gonna reach the low here and 1.5, then gonna rotate back up. Which this brings me to a point of that when you arrive at a level, the when you arrive at a level of interest is almost as important as the level itself. So when I look back here to how we interacted with the prior day's point of control, we got to that price pretty early. And the auction, the auction will, generally auction between these references from here, down to this reference or this volume reference. So it'll the auction references between prior references of value. So if I get to a level early, that's an area I can lean off. So we're holding below yesterday's point of control. We're establishing the current day's point of control lower. We're building out some volume down here. We've got an open overnight stat. We've got negative delta. We just need some volume to really make this thing get going. Okay, so again, is this a trade early or trade later day? In this case, I'm definitely looking for that break earlier in the session. And in fact, when you look another half an hour later, as we go into lunch, you can see we actually got the break that we're looking at that also accompanied with higher volume, really nice order flow spike, broke that IB low with good selling showing up. They got to 1.5, they got to 2x. So, in terms of the criteria of the go with trade, we're now there. Now the question is this, what type of day type is this? What open type is this? So this is an open auction in range. So I'd overlap an A and B period. And right now, this could be a trend day because I've hit 2x the IB and it's early in the session. So unless I can get back inside that IB or start rotating, looks like I could be in a trend day and I'm going to stay short and potentially get to this 34.65 level later in the session. Okay, so now that takes us into the next area, which is IB formation to lunch. Okay, so this is from 10:30 a.m. Eastern up until 12 p.m. Eastern, where I have decent volume and consistent price action. Are we getting IB extension? Which direction? I'm looking for smaller time frame triggers for IB extension to go with if provided before 1.5 the IB is achieved. I'm looking for smaller time frame triggers for IB extension fade if 1.5 the IB is achieved. I'm asking, are we accepting or rejecting initiative prices? And how much of the average trading range or expected range have we covered? How strong is the order flow? Is the posture of the auction changing? Where is price relative to developing value? Okay, so when I go back and look at this thing right here up until lunch, so from all of that period up until lunch, there was good option activity. Once I got to lunch, the delta was definitely there. I've already hit 1.5 the IB. I do have price to value divergence, so I could be looking for the fade. But I'm going to look, because this is right at lunch, which is 12 p.m. Eastern, I'm going to have to wait and see what happens once I get through lunch. Because as we get to lunch, so this is that 12 p.m. to 1 p.m. Eastern period, volume dries up. It's a good time to take a break. No initiating entries for equities during this time frame. The price action is too inconsistent. Take note of volume, price value relationship, and delta, and relationship to IB. These are things to take note of during lunch, because then the next period, the lunch to final hour, is when we would again look to potentially be active. This is that 1 p.m. to 3 p.m. Eastern. Volume remains muted, so be careful. I mean, I actually have a note to myself, hey, be really careful on trades after 1 p.m. Eastern. My performance personally degrades after 1 p.m. Eastern. So I'm looking for smaller time frame triggers for an IB extension fade if I've already hit 1.5 the IB, if I've got price to value divergence, and prices within range of the initial balance targeting the volume point of control. I would only be looking for go with trades if I was in a favorable reference to value. So that means if I was looking to short, I would be at or above developing value. If I'm looking to be long, I would be at or below developing value. But typically at this time of the day, I'm looking to play the edges, watching for algo behavior. So like, is there like an 8 EMA or 21 EMA that we're pending and pinging off of? And then how much of that expected range have we covered? If I've exhausted the expected range, I'm looking more at that time of the day. If I've already exhausted it, I'm not looking for us to get much more. And again, how strong is the order flow? Is the posture of the auction changing? This is always keeping me nested in context within time. And then how are we interacting with decision levels? Okay, so now as we look at the chart here, here's after lunch period, and what's been going on. Well, we've already hit 1.5 the IB. We're past 2x. So for the fade to work, I need to be back inside the 2x. I also need price to value divergence, which I have. I do have single prints here. So right now I've got a double distribution. I've got double distribution trend day, and I have an area here where value is developing that I could migrate this point of control lower. The volume has stayed pretty consistent since that move from IB. I still have a reference down here at 3465, a prior naked point of control that seems, very doable, especially if this is a trend day, because in a trend day, time shuts off the auction, not counter activity. I do see some taper in the profile, so it's getting a little late. It's getting a little late to be short, but I don't see the order flow that would suggest that I should go long. Okay, so I'm gonna have to, watch how this thing develops. If I go another 30 minutes, I'm spending more time down here. You can see how I'm building out more volume here, and also the volume's getting weak again. So this is all part of them trying to migrate value lower. So I would not think about being short unless I was at or above value. Well, if value's here, I can't be for a go with short. So the only opportunity would be an extension fade long, but I'm outside of 2x the IB. I'm nowhere close to the IB, so there's not an opportunity for me to look to fade that back towards the IB. We go another half an hour, and we've now successfully migrated the point of control lower. Now that could be an opportunity to go with, meaning I could find a selling to go with the sellers if I was above value here. Again, not looking to fade this because the fade requires me to be back inside the IB, so no IB extension fade here. I could potentially look to play off of a responsive trade off of the 3465 if I could get there, but I would need to get there. So this is 2 p.m. Eastern. I would need to get there before 3 p.m. Eastern, because again, what time I get to a level is as important as the level. I need enough time for the counter activity to step in. Otherwise, the time shuts off the auction and there's no opportunity for it to counter. Okay, so then we get in the final hour to the US close. So this is from 3 p.m. to 4:05 p.m. Eastern. The preference I have is to have no trades, unless I'm in a trend where I'm expecting the end of that I'm closing the trend day trades. I'm only initiating trade would be an end of day counter trend fade. This is a setup to look for on a trend day, as at the very end there's a counter trend fade. But then I'm right back to beginning to build the narrative for the next RTH session. And then that cycle starts over with that Asian open. So like here, if we look at how this is closed, you can see that actually that the auction did not get to that 3465, so no opportunity to trade back in this direction. It did stand as a double distribution trend day. So, we saw the lowest, we're in this last hour, we're expecting we could see some lower prices again. If I could trade up here, I could potentially look to trade this way. But this is, really, since the go with break of IB, it's just stay short. And they've accepted value lower. The order flow is with me. I've got an untested reference lower. From a posture standpoint, this was the 5-day. I've broken below that. I'm in a new posture. And so contextually, this thing says, stay short and don't look to really do a whole lot unless I can get above value. The auction does come up here and test towards the top of those singles, almost back to the VWAP. Does find some sellers, then that would, I'd look for that to trade back in this direction. And then you can see here that by the close, they did trade back in that direction, further accepting these lower prices and establishing the VPOC down here. So overall, again, open auction in range, double distribution trend day, that would have expectation of lower prices the next session. At least this 3465 would be a key reference level. And then you're going back and you're clearing up your decision levels and finding the areas that you want to be mindful of. You'd have these singles, because that's the distributions. If I'm in the lower distribution, I'm bearish. If I'm in the upper distribution, I'm more bullish, and it just starts all over again from there. Now that's the general day-to-day session. Now there's other sessions to consider. One is if you trade non-equity products. Okay, so everything that we just covered was all the timeframes for equity products. But what if you don't trade equities? The approach is the same with adjustments for time of day relative to the product. So this can actually help the multi-product trader focus on areas of strength in different products. For example, the IB and gold currencies and treasuries complete at 8:20 a.m. Eastern. Energy, that's heating oil, 90 gas, crude oil completes at 10 a.m. Eastern, and equities, meats, and grains at 10:30 a.m. Eastern. So you can actually wait for the IB to close in a cascading fashion between products, especially if you're looking for the IB trade, whether go with or fade. Binary events. So this is a timing that impacts auction activity, specifically FOMC, ECB releases, non-farm payrolls, crop reports, EIA and crude oil, Fed speakers, testimonies. They're binary because there's no edge prior to the release. And we talk about this in module 15, but the auction typically balances in a tight range before the release and volume contracts. And then there's typically a first reactive move from the release. We mark the scene of the crime. Then price needs to accept in the direction of that initial spike or run the risk of something we call the second move. A second move is a higher probability position where you're actually going with the second move off of that release. We talk about that in module 15. But no initiating trades on a release. Wait at least half an hour past an economic release to see clearer where the auction's attempting to go and how good of a job it's doing that. So here's a way where time can help you trade an event like this. Don't try to be like right on the release. I know it can be really attractive because there's a lot of movement and it feels like there's a lot of opportunity, but also be reminded there's lots of risk. And if we control risk, we stay in the game. Holidays. There are several holidays that the exchanges look at: Martin Luther King Day, President's Day, Good Friday, Memorial Day, Independence Day, Labor Day, Thanksgiving, Christmas, New Year's. Now, on these days, there may be a Globex session or half a Globex session that continues despite the closed sessions. Volume and range is muted. We do not trade these at all. We treat them like an extended Globex day in our planning process. For example, on if we were to have Martin Luther King Day typically on a Monday, so we would not use that information. We would actually look at the prior Friday as the reference to look at. We would disregard any trade that took place during Martin Luther King Day. No initiating trades during holidays or those shortened sessions. Volatility. Volatility predicts ranges. We talked about this in module 9. There's volatility cycles throughout the year. Using vol rank can help discern what type of cycle a product is in. The expected range has a 70% probability of holding the auction. It's more accurate than the ATR. Volatility is mean reverting. So we'll have seasons of higher volatility that are followed by low volatility and vice versa. Knowing which cycle better suits your style, whether high vol or low vol, is good. And knowing which cycles of volatility better suits you and pick trading products accordingly. This is a cycle of time because there are times of higher volatility followed by times of lower volatility. If you find that you're a better high vol trader, you're going to be frustrated and it's going to be like death by 1,000 little cuts trying to trade the same way in a low vol environment. Especially if you're developing, like right now, if you've been you're new to trading or have been in the last 6 months, we are in a higher volatility environment, meaning that we're trading around 30 on the VIX, but we spent the prior 5 years around 12, so half the volatility. Right now we're seeing about 60 points of range in the S&P 500. We were seeing 30 points of range. We're seeing 250 points in the NASDAQ. We were seeing 70 to 80 points. Okay, that's a very different market, very different experience, and that's a type of season or time or session as it pertains to trading to be aware of, as it will impact your performance. Weekly rhythms. Okay, there are different things that we expect week to week. Monday, and this is just a general rule that will serve you well, is that no trades before the initial balance is formed on a Monday unless you're already a consistently profitable trader. As you become a consistently profitable trader, specifically using the IB trade, you will, one of the reasons that we encourage you to look at the IB trade is because it helps you learn auction behavior. Once you're really adept at looking at auction behavior, you're going to see opportunities earlier than the IB, but you're not going to yet have this. I mean, until you've got that consistent profitable skill to discern how to manage risk around that, we would encourage you to stay clear of it. But you'll find other opportunities and other ways to be active and better trades to even define once you're already consistent. Until you have that, no trades before the IB is formed. While Tuesday, Wednesday, and Thursday, we look for trades within all of those micro sessions. And then Friday, really nothing good happens after 1 p.m. So we that last hour or after lunch, we really look to not do any type of trade at all, as there just really isn't good counter activity, and the directional activity is typically very slow and mediocre. Annual sessions. Okay, so these can certainly be impacted by world dynamics, but generally, January through March, there's better than average IV in volume. April through July, we start to see that taper. August through Labor Day is typically a dead zone where the IV falls, range contracts, retail takes over. Labor Day to December 20th ish is a return of volatility in volume. And then the end of year from that December 20th to the end of the year is just a dead zone. We call it the retail show. And we just look to really not be active. It's really good time to lose money at the end of the year. Other special sessions to have consideration for, one is when we're in a financial crisis. They don't happen very often, but when we are, we get different types of price action, and it's a time related thing. There will be that season will be in place and then it will pass. We'll see weird, wonky types of activity. We'll see the auction kind of evolve a little bit. In the current, at the time of this recording, we're in the pandemic, one of the things that we've seen is we've seen a really heightened activity at 3:50 p.m. Eastern that is directly correlated to the presence or lack thereof of traders on the floor at the NYSE that are balancing trades off book versus on book. And so that's a unique situation. I don't know if that will carry once the pandemic's over, but it's a present thing right now. Speaking of the pandemic, that's certainly a special session that has a season of uncertainty that will go away. General election seasons as well, and also wartime are all times that happen over time that change the dynamic of markets, and they're time related. They will come, they will go, but they certainly impact behavior. Now, we've hinted to this throughout this module, but specifically looking at IB trades relative to time. And again, with respect to the IB, that IB is formed that first hour. Should I go with it or should I fade it? Well, one thing to do is every half hour perform checks of the open type, the day type, the delta, the volume at each 30-minute break. Like know where you are relative to value, where's value developing. For the go with, for excursion outside the IB toward 1.5 or 2x the IB, we want to see a break early, so before lunch. And acceptance outside the IB that does not return to the IB later in the session. Ideally, time would shut off the auction and this would position us in a trend, because an IB go with is a trade going away from value and it's going to establish value somewhere else is the ideal scenario. And if we can get outside that IB and stay out of that IB, even better. If we tag 1.5 and return to the IB fairly early, the other spot for an IB go with entry would be on the advantageous side of value. So again, buying below or selling above in the afternoon after lunch, the developing volume point of control, targeting rotations back to that developing point of control. In general, we avoid late go with or breakout trades unless it's accompanied with very strong delta and very strong relative volume. For the fade to work, we need a mix of time and excursion in our favor. So can we get back inside the IB fairly early in the session, for example, before lunch? Or are we near inside the IB after lunch? If not, it's less likely for the fade to work. If we find that after 1 p.m. Eastern that we're nowhere close to the IB, then we're not in a day type, like a normal day, normal variation are needed for an extension fade to work. If we're in a trend day, multiple distribution day, that is not going to work as a trend. So that's where, again, checking to see what kind of day type we are. If we get back into that IB early, we're going to be more rotational opportunity. Man, we can fade the edges and it's going to work really well. We need enough time in the auction for counter activity to shut off the auction. We don't want time to shut it off, meaning that the end of the session shuts off the directional auction, as that's what happens in a trending situation. The longer we hold outside the IB, the less likely we are to return to it. So again, that's where that time part plays into the performance. Early tags of decision levels, look for reversals and go with the reversal. Late tags of decision levels are seen as targeting and exit. So that's where, if I'm in the IB and there's a decision level down there and it's late in the session, I'm targeting that. That's going to be a target, not a spot that I'll look to fade it. I'd look to target that. Again, be aware of 30-minute session breaks. These can alter the session structure, and look to avoid making decisions within 5 before or after a 30-minute period change when possible, as there can be there's typically a quick little change that happens that could see a little spike in price action that doesn't really necessarily change things overall in what's happening in the auction, but it can change, it can push you out. So just be aware of that from a timing standpoint when you're looking to put on that trade. Now, to close this module, I want to just look at a couple examples that kind of walk us through the thinking of how we go about looking at these opportunities. And so for example A, so here's the scenario. It's a session after a holiday break. We're set to open above a volume point of control from a holiday session. The question is, what are the key references for the coming session, and what expectations do you have about the auction coming into it? Well, in this case, again, because it's a holiday break, I don't care about that volume point of control from the holiday session. I care about the volume point of control from the last full volume session, which, like if this is a Monday, it would be the prior Friday. Or if it's like July 4th and July 4th is on a Wednesday, I'd be looking at the prices on Tuesday. That would be the key reference for me. And so my expectations are, if I'm inside of the last real session range, I'm looking at that area of value and looking for potential opportunities to break away from it. If I'm opening outside of range of that, I might be looking for a quick fade to come back and test those. Example B, the auction has a binary event later in the session. So the auction is balancing prior to the event, as you'd expect. The IB range is average. The question is, what is your plan? What questions about the pending post-binary event auction would be rolling around in your head? Well, for me, my plan is to not be active. I want the event to go. I want to see the initial price action. I want to give it time to develop and see, do we get initial IB extension off of that event, and then get a second extension where the auction goes neutral that I could potentially go with a neutral opportunity. And what with respect to that, what are key nearby references that might be hit on those types of directional excursions that I could look to go with. And again, because it's a binary event, there's typically a move from balance there. So I'm really looking for, how can I position myself with a go with trade on that. Example C, so the auction is pressed lower from the open and the IB formation. There's no IB extension yet. The auction is trading higher during the IB formation to lunch period. Delta remains to the sell side. What are you looking for and when? So when I see this, if I see that the auction has been pushed, there's lower value maybe during the day, but I don't have IB extension yet. I have delta that's to the sell side. What am I looking for? Well, I'm still looking for that IB go with trade. I could also be looking for the fact that if I'm coming up to lunch, I've still not extended the IB. It could be a non-trend day where we don't extend the IB. Other things I'd be looking for is how wide is the IB relative to its average. It could be that I don't have IB extension because I have an initial balance is 2x its average, and in that case, I may just prepare myself that I'm not going to get IB extension. And if I don't have IB extension up through lunch, it's less likely that I'll get a really good excursion on the IB after lunch. So I'd rather let it extend, come back inside the IB. I could look for that to fade. And then finally, example D, the auction has established the IB and extended higher. So we got IB high extension. The IB width is wider than average, and there is a key composite high volume node within range of 1.5 the IB. Prior to lunchtime, price is holding near the IB high. Where and when am I interested in participating? Well, so in this case, if I've got a composite high volume node, which would slow the auction, that's within range of 1.5 the IB. Prior to lunchtime, price is holding near the IB high. After lunch, I would look to see, after lunch, I would look to see, hey, during lunch, did we go up and tag that price and come back to the IB? Or, are we still in between the IB high and that price after lunch? I'm not going to look to go with up to that level. I'd rather look to see if the auction could go up to that, tag it, come back in the IB. I can look that to fade. So key takeaway, again, there are better times to trade. And if you find that performance is better at a specific time of day, look for opportunities in those time periods and avoid the others. There are better times to trade, just like there are better prices to place trades at. Your homework to further enhance these concepts is to construct a trader checklist for the given sessions of the day. Like I look through, at each period, I go, okay, here's the kind of stuff I'm looking to do. Use that as a key to look for certain behaviors. Define the sessions that are best fit for you by logging the time of your trade and filter for P&L. I made a significant change a year and a half ago when I was going back through my records, and I was like, oh my gosh, the trades that I take before the IB is complete, I'm about a 40% win rate. The trades that I take after the IB is complete, I'm an 80% win rate. So what do you think that I did? I really focused on the 80% trades. And I then spent time refining my process for trades before the IB, or I added additional decision criteria to make sure that those trades were better. Develop a trade idea based on a session, and we'd love to have you share that to get some feedback and refine that. That's module 2, using auction sessions to find better times to be active. Hope that helps you learn how to profile, make better trading decisions, and take more profit.